Welcome back to Switzer. He's been predicting a sell-off for some time, and now our king of charts, Lance Lay from Accountancy Invest, is back to tell us how deep this pullback might be. Welcome, Lance.
Hi, Peter.
Now, we've been talking about pullbacks. It didn't come kind of straight away when we thought. Looks like it's happening now.
We're getting there.
We're getting there. Okay, let's not muck around. You want to show your video clip from the last time? So, guys, can we take that away?
I actually think it'll go up to that and have a sneak peek at the R level there. Why do you call it R? Because I think it's resistance. Okay. So that resistance.
So we have a bit of an audio problem there, Lance. But you thought you couldn't hear it, but our viewers couldn't hear it as well.
I see.
So summarise what was said then.
Well, the last time I was on, in the March appearance, I thought it could go up a little bit further and then come off. I had an R line on the chart, and I thought it would flick up to there and come down. It basically has.
Yeah. Right.
So if we go to that chart now.
Okay. Let's go to the first chart, guys, and we'll take it up from there.
So where it says M was when I was on the show last, and if you sort of start from the very bottom, where there's the 16th of November, this has all been going up and up and up.
Yeah.
So in March, I identified one more level, which is R, and that level is the equivalent to the 8th of October 2007 high. It's 1576. This is the US.
And of course, we know the S&P 500 broke through its all-time high.
That's right.
Recently, and that's what you're showing, where the R line is, that peak that's gone above it. That's the S&P going into brand new all-time high territory, right, mate?
That's right. And then now we're off, and we're down to 1552.
That's the L line.
That's the L. So this L was a level that was identified way back in January. Yeah. And we've basically
bounced off it twice?
Bounced off it, gone under and over and over it, and now we're right on it again. And those lower levels of the smaller S's and the big yellow S, I think we're headed down there finally now.
Okay, how far down is that? Say the worst case scenario on there, Lance, how far down is that?
The big S with the yellow line is 5.2%.
Okay, so we're not talking about cut the wrist. This is a pullback. It's an opportunity to get in the market.
We've actually been waiting for this.
We have been
since January, and it's extended up slowly.
I got a lot of cash there, mate. I want to throw in.
Well, your chance is coming, Peter.
That's right. What do we buy? That's going for another question. Okay, let's go to the next chart.
Let's go to the next one. So the next one, this is gold.
Now this is one that hasn't conformed to what you would have liked, Lance.
It hasn't. However, there was. So if you look at N, where that was the November show.
Yes.
We were right in the middle where there was a G, which stands for good, and the B stands for bad.
Yeah, I like your really complex analysis.
That's right.
Lance. Yep.
So once it broke through the B, as you could see, it really started.
We were in the Badlands.
Yeah, we're in the Badlands, and the S is the important support which it broke through.
Yep.
And that comes in at 1522, and more or less within inside of 2 days, it's fallen $200, and it's now sitting at 1376. Now at 1376, it's already bounced off 1322, and I think it's going to bounce a little bit more now. I think that it'll bounce to where that T mark is, and I think it'll bounce up 5.2% as a minimum. And probably even go towards the S mark.
Now, Lance, you don't get too bogged down with fundamental analysis. You always like to think the fundamental analysis reinforces your technical observation.
Right.
But when it comes to gold, you are more a fundamental player as well, aren't you? Because of your heritage. Gold, it's just like the Lebanese love cash, the Chinese love gold. So Is this just surprising you, this current drop? Does it make you feel as though this is a support level at these levels now?
Look, whenever something falls, 18% in 2 days, that's always going to be a little bit of a shock to the system.
Yeah.
I expected that it could probably come off a little bit, but never such a huge move. Now, I think the part that I suppose doesn't match up with the fundamentals in one sense is that there's still QE going on. I think which
should make gold popular. QE means too much money. Inflation down the track. Sure, inflation's not here now,
correct.
So it could be a time thing. But someone who's prepared to wait, when the inflation eventually comes, gold's going to be popular again.
And that's what a lot of the people are saying.
Yeah.
I think where the good news side of this story of gold going down is that if the QE tap were to be turned off, it would be an indication that things are going much better.
Yep.
It's no longer needed.
That's right.
And so on that side of the argument, if you want to talk fundamentals, then you could almost say it's a good thing that gold has fallen because things are actually improving. On a trading sense, I think now, if gold stabilises around here, I had in your Switzer Super report, there was 0.5 in the bearish report, on the bearish points, which was written on the 8th of April. And in that report, I had 1290 as a possible ugly scenario.
Yeah.
Okay,
a U number was a U letter. Yeah, right. Okay.
And we're we're 90% there,
Yeah.
and I think that's good enough.
Yep. Okay, great. Let's go to the next chart. This is Shanghai Composite.
So Shanghai,
We'd love this one to turn around, Lance, wouldn't we?
we certainly would, and I think we're near a bottom here, Peter.
Yeah, great.
So what I've said here is that the consolidation is now sufficient and the test is now on to see if we're at a bottom.
Yep.
If we look at this chart here, it's been basically going down all of last year. November actually, N is the November show.
Yeah.
It actually sat on B, the bad level.
Yep.
It bounced off there, did 25% in 2.5 months, and now it's come off. So it's, if I look at the February show where the F was, I identified...
What does F stand for? Don't tell me. You're not using expletives on my show, Lance. I hope
Never, Peter,
Okay.
never. F stands for February, and M stands for March.
Yep.
And in February, I actually projected lower levels because I thought...
And that yellow line showed
The
it.
yellow line, so I thought 25% in 2.5 months is too much.
Exactly.
It's gone to those that first yellow line since. The second yellow line, which is in line with the 200-day moving average, is where we've now gone to. And more or less where we are now is we're off 10% from the top, we're up 11 from the bottom, which is the N, and I think we're ready to go.
Yeah, to me, a lot of this sell-off, people are trying to sort of being smart after the event. A lot of it is what I call the well-duh factor. We've gone up so hard, we have to come off the board. That's why I've been writing, a pullback has to happen. And I think people are reading a lot more into it than they have to. Let's go to the next chart.
So this now goes to the ASX 200. The consolidation falls are coming is what I've titled this chart.
Yeah.
And again, from the 16th of November, you can see we've gone all the way up. We've done 18% to the peaks.
Yeah.
R is the resistance, where I thought it would flick up to from the F point, which is the February show.
Yeah.
We've gone up there. We've had a look. We've come back down. M last month was lower than February.
Yeah.
And now today, at 4924, we're again lower than March. So we're headed towards the S, which was identified back in February.
Yeah.
But I think we're going to go a little bit further now.
Yeah.
I think we're going to
The big S.
to the big S with the 3.7%.
Does that mean it's a 3.7% fall from the top?
From here.
From here?
From here.
Okay. So that would mean...
2 more days like today and a bit more.
Yeah, okay. And but it would probably be over a sustained time. But what you're basically saying is, for people who've been waiting for the pullback, we're in the pullback now. The tricky part is, where's the bottom? And that's always one of the big challenges in this game.
And you know what? On these charts, I try to help your viewers and your subscribers look to see where that might bounce off.
Yeah, for sure. All right, mate, one last thing. Do you think that the China story is as negative as some people are saying? Just in a nutshell.
I don't think so.
And I know you've been cautious about China, but you think they're over talking that slowdown.
Look, you know, you always need a real reason for something to slow down. And at the moment, we've got some very real reasons. But you know, if you look at the chart, we've actually already come off all of last year. We've come up that massive increase, 25% in a short period of time. We're coming off again. They're actually bottoming as all this talk about bad news is happening.
Okay, mate. Fantastic. Thanks for joining us on the show. We're running out of time. That's the show for tonight. Thanks for joining us. I'll see you next week. Enjoy yourself over the weekend.